Have you ever wondered how millionaire bankers make decisions that shape entire economies? What secrets do they use to consistently grow their wealth while others struggle? In this video, we're pulling back the curtain on the world of millionaire bankers, diving into their strategies, daily routines, and what really sets them apart. Get ready to uncover the hidden truths behind their success and learn how you can apply some of these tactics to your own financial journey. The mindset of a millionaire banker. Millionaire bankers aren't born with a silver spoon, they develop a mindset that propels them to the top. Their approach to money is strategic, disciplined, and far from impulsive. Here's how they think. 1. Long-term vision. Unlike many, millionaire bankers focus on long-term gains rather than short-term profits. They're not just looking to make quick money, they aim to build wealth over decades. This long-term perspective helps them withstand market fluctuations and stay ahead of trends. Dr. Richard Thaler, a Nobel laureate in economic sciences, highlights the importance of predictive accuracy in financial decision-making. According to Thaler, successful investors often use complex models and historical data to forecast future trends. This foresight allows millionaire bankers to position their investments advantageously long before others catch on. 2. Risk management. They're experts at managing risk. While they're not afraid to take calculated risks, they do so with a clear strategy in place. They use various financial instruments, such as derivatives and hedges, to protect their investments and ensure stability. As noted by behavioral finance expert Dan Ariely, millionaires understand that uncertainty and risk is an inherent part of financial markets. Rather than avoiding it, they strategize around it. This involves creating a range of scenarios and preparing for each one. For instance, when Elon Musk launched SpaceX, he faced immense uncertainty about its success. Yet, his calculated approach to managing risk and leveraging opportunities demonstrates how accepting and preparing for uncertainty can lead to groundbreaking achievements. 3. Continual learning. The financial world is ever-evolving, and successful bankers are committed to continual learning. They stay updated on market trends, economic indicators, and new technologies that could impact their strategies. Millionaire bankers are relentless in their pursuit of improvement. They don't rest on their laurels, they constantly seek ways to enhance their knowledge and skills. Dr. John P. Cotter, a professor at Harvard Business School, emphasizes the importance of continuous learning in leadership and financial success. Millionaire bankers often participate in advanced training, read extensively, and attend industry conferences to stay ahead of the curve. For instance, Jamie Dimon of J.P. Morgan Chase is known for his dedication to understanding emerging financial technologies and trends, which keeps his firm at the forefront of the industry. Key strategies millionaire bankers use. 1. Diversification. One of the most fundamental strategies they use is diversification. By spreading their investments across different asset classes, stocks, bonds, real estate, and commodities, they reduce the risk of significant losses. This approach helps in stabilizing returns over time. Dr. Richard Thaler, a pioneer in behavioral economics, highlights that understanding these biases helps bankers anticipate market movements and make more rational investment choices. By applying behavioral finance principles, they can better predict market reactions and adjust their strategies accordingly. 2. Leverage. Millionaire bankers often use leverage to amplify their returns. They borrow funds to invest more than they could with their own capital. However, this strategy requires careful management to avoid excessive risk. Beyond traditional asset classes, millionaire bankers explore alternative investments like art, collectibles, and private equity. For example, art investments have gained traction as a hedge against inflation and a means to diversify portfolios. According to the Knight Frank Luxury Investment Index, the value of art investments has surged over recent years, offering impressive returns. These alternative assets not only provide diversification but also can be less correlated with traditional financial markets, offering a buffer during economic downturns. 3. Network and relationships. Building strong relationships is crucial. Millionaire Bankers network with influential individuals and institutions to gain access to exclusive opportunities and insider information. Their connections often provide them with a competitive edge in the market. 4. Innovative investment vehicles. They often invest in innovative financial products that aren't available to the general public. These could include private equity, hedge funds, or specialized investment funds that offer high returns with managed risks. 5. Data-driven decisions. Using advanced analytics and big data, millionaire bankers make informed decisions. They leverage sophisticated algorithms and financial models to predict market trends and optimize their portfolios. Millionaire bankers employ advanced algorithms to analyze vast amounts of data, uncover hidden patterns, and make data-driven predictions. For instance, Dr. Marcos Lopez de Prado, a leading researcher in financial machine learning, explains that these algorithms can detect subtle signals in market data that human analysts might miss. This technological edge allows them to make more precise investment decisions and manage risks more effectively. Lessons from millionaire bankers. What can we learn from their methods? Here are some key takeaways. 1. Develop a long-term strategy. Like millionaire bankers, create a long-term financial plan. Avoid chasing quick gains and focus on building sustainable wealth over time. Dr. Daniel Kahneman, a Nobel laureate in economics, has highlighted how cognitive biases can impact decision-making. Millionaire bankers leverage these insights to anticipate market reactions and adjust their strategies accordingly. They understand that investors often act on emotion rather than logic, fear during a downturn or greed during a boom. By predicting these behaviors, they can position their investments to benefit from market swings, essentially turning common psychological pitfalls into opportunities. 2. Manage risks wisely. Understand and manage risks effectively. Diversify your investments and use financial tools to protect against potential losses. They understand that the market can be volatile and that long-term success requires waiting for the right opportunities. Warren Buffett, renowned for his investment success, often speaks about the waiting game as a crucial part of his strategy. His famous quote, "The stock market is designed to transfer money from the active to the patient," underscores the importance of patience in achieving substantial returns. 3. Invest in your knowledge. Continual learning is crucial. Invest time and resources in educating yourself about finance, investing strategies, and market dynamics. For example, they might use mental accounting techniques, where they allocate different types of investments into separate mental accounts to better track and manage their portfolios. This approach helps them avoid the pitfalls of combining all investments into one account, which can skew performance evaluation. Behavioral finance expert Richard Thaler's research shows that such practices can lead to more disciplined and effective financial management. Real-life examples. Let's look at a few real-life examples of successful bankers and their methods. 1. Jamie Dimon. The CEO of J.P. Morgan Chase is known for his strategic foresight and risk management. His approach includes a focus on long-term growth and maintaining a diversified portfolio of investments. During the 2008 financial crisis, J.P. Morgan Chase, under Dimon's leadership, navigated the turbulent waters with remarkable stability. Dimon's ability to make swift, informed decisions while managing risk was a key factor in the bank's resilience. His approach involves a deep understanding of market dynamics and maintaining a strong, diversified portfolio. Dimon's leadership during the crisis was so effective that it earned J.P. Morgan Chase the reputation of being a safe haven for investors. 2. Warren Buffett. Although not a traditional banker, Buffett's investment strategies are often emulated by bankers. His philosophy of value investing and long-term holding has proven incredibly successful. Buffett's famous investments include iconic brands like Coca-Cola and Apple. What sets him apart is his ability to identify undervalued companies and stick with them through market fluctuations. Buffett's investment in Coca-Cola, for instance, has been incredibly profitable, showcasing his skill in recognizing and nurturing valuable assets over decades. 3. Larry Fink. As the CEO of BlackRock, Fink's emphasis on data-driven decision-making and innovative investment solutions highlights the importance of leveraging technology in finance. Under his leadership, BlackRock has become a global leader in asset management, partly due to its innovative use of technology. Fink's focus on data analytics and technology-driven investment strategies has transformed how investment decisions are made. BlackRock's Aladdin platform, for example, uses advanced analytics to manage risk and optimize portfolios. Fink's forward-thinking approach demonstrates how leveraging technology can provide a competitive edge in the financial world. The future of banking. As we look ahead, the role of millionaire bankers is evolving. With advancements in technology, such as artificial intelligence and blockchain, the financial industry is undergoing significant changes. Millionaire bankers are adapting by incorporating these technologies into their strategies to enhance efficiency, security, and decision-making. Millionaire bankers operate in a world of complexity and high stakes, but their success stems from disciplined strategies, risk management, and a commitment to continual learning. By understanding their mindset, strategies, and daily routines, you can gain valuable insights into how they achieve and maintain their success. Thanks for watching. If you enjoyed this deep dive into the world of millionaire bankers, don't forget to like, subscribe, and hit the notification bell for more engaging content. Share your thoughts and questions in the comments below. What aspect of millionaire bankers' strategies intrigues you the most? Until next time, keep striving for success and managing your finances wisely.